Welcome back to Roxom TV. I'm your host, Jamie. We've got a very packed show today, so let's get straight into it because today's big question is what kind of world are we actually moving into? A world where inflation sets one thing, but your grocery bill sets something very different. A world where sovereign wealth funds are quietly buying more Bitcoin while Harvard University appears to be selling at a loss. Or a world where AI is replacing jobs inside crypto itself and apparently even choosing your future boyfriend and girlfriend. So yes, that's today's show. First up, we break down the inflation story. So official US CPI came in at 3.8%. But does that number actually feel real though? Because when you look at what everyday things cost compared to 20 years ago, like beef, insurance, college tuition, housing, that numbers tell you a very ugly story. And this goes straight into one of Bitcoin's biggest arguments. Is inflation being underreported, or are people simply feeling the pain very differently? Then we move into one of the strangest but most fascinating Bitcoin stories of the week. Reports say Iran might be building a Bitcoin-enabled maritime payment and insurance platform around the Strait of Hormuz. So yes, one of the world's most important choke points. This is not meme coin speculation. This is geopolitical Bitcoin. And if that's true, it might be one of the clearest real-world examples yet of why neutral money matters. Then we'll look at what smart money is doing because Abu Dhabi's sovereign wealth fund just quietly increases Bitcoin ETF position again. That's over $500 million in exposure. Meanwhile, Harvard University appears to be doing the opposite, so cutting Bitcoin and exiting Ethereum, potentially taking a huge hit in the process. So who's making the smarter move here? The sovereign fund accumulating quietly or the Ivy League institution reducing risk? So of course, we'll break down with charts. And if you're wondering why Bitcoin dropped below 77,000 recently, we've got that covered too. Because despite better crypto regulation headlines, despite institutional adoption, Bitcoin still sold off hard. Well, the reason why is quite simple. We have macro, we have really hot inflation, Fed uncertainty, oil prices, and ETF outflows. This is bigger than just crypto. This is a macro stress test. And then we move into AI, and honestly, some of these stories feel straight out of some science fiction. So Dune Analytics, being one of crypto's most important on-chain analytics platform, just cut 25% of staff as it shifts towards AI automation. Meaning, yes, AI might now be coming for crypto analysts too. And Elon Musk just lost a major legal fight against OpenAI, which may now clear the runway for one of the biggest IPOs in history, potentially $1 trillion OpenAI listing. Of course, that's huge. And just when you think that tech can't get any stranger, Bumble, the dating app, said it's killing the swipe. That's right. So the feature that basically defined modern dating is now gone. Now AI wants to help choose your matches instead. So apparently AI might replace your job and maybe your dating instance as well. So very Black Mirror vibe, if you ask me. So why would you want to stay till the end of the show? Because this is not just about headlines. This is about understanding where money is moving, how institutions are thinking, what Bitcoin's real use cases might look like, and how AI is quietly reshaping everything around us. If you care about markets, if you care about Bitcoin, macro, or just where the future is heading, you will want to stick around. So a lot to go through. Let's get straight into the first story of the day. So this is a huge story in the AI world because apparently Elon Musk, okay, right here being defeated by OpenAI. And it's not just another Elon Musk tweet fight. This is a very serious legal battle over one of the most important AI companies on the planet. And the result is that Elon Musk lost, and he lost fast. So what happened is that a federal jury in California ruled against Elon Musk in his lawsuit against OpenAI and Sam Altman. And the jury didn't even take that long. It was less than 2 hours. So that tells you the decision was pretty clear. Now, what was Elon Musk actually arguing? The answer is quite simple. He said OpenAI abandoned its original mission. So remember how OpenAI started as a NGO, so non-profit organization. The stated goal was to build AI that benefits humanity, not to maximize profits. Elon Musk was one of the original co-founders and he helped fund the company in the early days. So his argument was that OpenAI changed that game, moved toward a for-profit model and betrayed the original promise. He wanted the corporate confession blocked and he also wanted damages. But why did Elon Musk lose though? That is like a kind of rare in my dictionary. So now this is important. The jury did not decide whether Elon Musk was right or wrong about OpenAI's mission. That's the key point. They did not say that OpenAI did nothing wrong. That's not what they're saying. Instead, the case was thrown out on timing. So basically, Elon Musk filed too late. Under California law, this type of claim has a deadline, which is 3 years. OpenAI created its capped profit structure back in 2019, while Elon Musk filed in 2024. So basically, it's just too late, case dismissed. And as you expect, of course, Elon Musk did not like this quite at all. So he immediately posted on X saying OpenAI leadership enriched themselves by, basically, in his own words, stealing a charity. Of course, that's strong language. And he said he plans to appeal. So this legal fight might not be completely over. So right now, let's play a clip. Let's hear what the lawyers on both sides represent, what they're saying in the clips.
We think overwhelming that there has been a breach of the charitable trust, but the jury never got there because of the statute of limitations issue.
And you met with the
reaction from Mr. Musk? Have you heard from him? I haven't had a chance to talk with him yet.
The finding of the jury confirms that what this lawsuit was a hypocritical attempt to sabotage a competitor and to overcome a long history of very bad predictions about what OpenAI has been and will become.
Now, this really does matter because this is so much bigger than just Elon Musk versus Sam Altman drama. The real story is what this means for OpenAI's future. This lawsuit was one of the major overhangs on the company because if your corporate structure is under legal attack, taking the company public becomes very messy. And investors, what they hate the most is uncertainty. But right now, that obstacle is much smaller for OpenAI. Sam Altman has reportedly been pushing toward a possible IPO, potentially in late 2026. And if that happens, we could be looking at one of the biggest IPOs in history. Some analysts think OpenAI could eventually be valued near $1 trillion. Yes, that's trillion with a T. That's the scale we're talking about. But the deeper debate is still alive, like what happens when a mission-driven AI lab becomes a commercial giant? Can you start as AI for humanity and end up as a trillion-dollar profit machine? That's a very philosophical fight underneath all of this. And honestly, the debate is far from over. But the quick summary here, like Elon Musk lost this round not because the court said OpenAI was morally right, but because the legal clock ran out. And practically speaking, this clears a much smoother path for OpenAI's next chapter, like what could mean the biggest AI IPO the world has ever witnessed yet. All right, so speaking of something important, of course, we have to dive into the macro data. We now need to look at the inflation data because the official number from the US CPI is that it's 3.8% year over year. And on paper, that sounds very manageable. But when you ask ordinary people, most would probably laugh at that number because food feels so expensive, housing feels so expensive, not only housing, but insurance, transport, healthcare. Everything feels heavier. So what is going on with this 3.8 latest CPI inflation report? So that is, of course, coming out from the US government. So that is the official number. But another data comparison is getting a lot of attention, which is here on X. So because it looks at what everyday items have actually done over the long term, and the numbers are pretty shocking. So actually, since 2000, if we take a look at ground beef, it's up 347%. So family health insurance is up another 320%. Sneaker bars, so yes, even chocolate is up 292%. Public college tuition up 243%. Coffee up 164%. Now, compare that with the official inflation coming out from the CPI report. While even the official figure is at 93%, that is still a massive gap. Because CPI is not just a simple real-life shopping bill. It's just like a model. It's a basket of goods, and that basket actually gets adjusted over time. For example, if steaks get so expensive, so here the example, ground beef, but let's say steaks, general beef, it gets expensive. The CPI model would assume consumers will switch to other cheaper alternatives that can reduce the inflation reading. But in real life, like people don't always feel richer just because they downgraded their dinner. That's where the frustration comes from. And this gets into a bigger economic argument. Like some say inflation is simply prices going up. Others say inflation is really about money losing value. In simple terms, like your dollar buys less than it used to, maybe less food, less housing, less energy, less life. And whether you love Bitcoin or not, that feeling is very real for many households in America. And because this is exactly the Bitcoin argument, Bitcoin supporters would say this is what happens when money supply keeps expanding. So we keep getting more dollars in the systems, less scarcity, purchasing power slowly gets weaker. And if that continues, people naturally look for scarce assets like gold, like real estate or Bitcoin. That's the hard money thesis. Now, to be fair, let's go back to the CPI report. It is still a legitimate economic tool. It was designed to track the whole really broad inflation trends, not perfectly reflects every family's personal budget. Hence, different households would view inflation very differently. So a renter views one thing, a homeowner views another, a family with kids feel different from a single adult. So CPI isn't fake, but it also might not match life experience, and that's the real issue. And as I mentioned, the whole basket would get adjusted on a time-to-time basis, so that's why it feels very manipulated. But the bigger question here, is actually trust for the CPI. If official inflation says one thing, but your grocery bill says something else, like who do people believe? That trust gap matters because trust in money is everything. So the final take here, okay, the official inflation might be cooling compared to the worst time ever. If we zoom out to 5 years, like all the way back to like a post-COVID, so June 2022, we reached 9.1% inflation, very insane figure. Right now, it's still down quite significantly compared to the worst time ever, but many people still feel squeezed. And that disconnect is exactly why the inflation debate keeps getting louder, because in the end, people don't live on spreadsheets. They live in real economy. And that's where the frustration actually lives in. All right, so we'll take a short break from here. When we come back, we are diving into more AI kind of destroying another sector. Right now is dating app. So Bumble is killing the swipe feature, and right now they are adding AI to find your companion for you. Like, is this scary? Is this another Black Mirror episode? I don't know, so I guess you have to stay around after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We're now taking a look at one of the most popular apps out there. I'm sure a lot of viewers of this channel might have used before, or maybe you're still using it. Of course, I'm talking about Bumble, a dating app. So Bumble is officially killing the swipe feature. And honestly, this feels weirdly emotional because whether you love dating apps or hated them, the swipe kind of defined modern dating. So left or right, fast judgment, endless options. And now Bumble said that era is over. So what just happened is that Bumble's CEO says the company is moving away from the whole swipe model. Yes, like that very feature that helped define dating apps. Instead, like Bumble wants AI matchmaking, meaning instead of you endless scrolling through faces, AI help choose for you. It looks at your profile, your messages, your preferences, your behavior, and then will suggest better matches. So the idea is less slot machine-like, more intelligent matching. So let's play a clip right now and see what the founder and CEO of Bumble say. Okay, so I assume the video is not working very properly, which is fine. But basically, I'll just give you the information. In some regions that this feature will be gone in Q3. But let's be honest, like people are exhausted. Like dating app fatigue is very real. So we have endless swiping, endless ghosting, conversations going nowhere. It became almost like a numbers game. And for many people, a very pretty depressing one. So Bumble is basically saying the old model isn't working. So let's try something new. And let's not forget the financial side. I like to take a step back. Why is Bumble even doing this? Why are they adding the AI elements into the whole app? So if we take a look at Bumble stock, so Bumble has fallen, so 95% from its all-time high, roughly compared to 2021. That is, of course, brutal. So this is not just a philosophical redesign for the whole app. This is also a business survival move. And when your model stops working, you experiment. Maybe AI right now because it's so clickbaity. But here's why this story feels bigger, because the swipe wasn't just a product feature, it kind of became very cultural. It changed how people think about attraction. So speed, attention, rejection, instant judgment. People literally train themselves to evaluate humans in seconds. That's kind of wild when you think about it. And here's where it gets very interesting. The same generation that feels anxious about AI replacing jobs may now be asked to let AI help choose romantic partners. That's quite a shift, and naturally, it raises a huge question. Like, do people actually want that? If you ask me, that is very Black Mirror stuff, so it's kind of scary, but here's my take. So technology can, of course, improve, getting more convenient, and absolutely for sure. Like it helps filter the noise, it helps save time, reduce bad matches. But dating is deeply human. Chemistry, if you ask me, is really weird. Attraction is unpredictable. Sometimes people surprise you. So, can AI really understand that? Maybe partly, but I'm not convinced it replaces human instinct because people still want that real connection, and algorithm is not perfect. All right, so that's for Bumble, but I do want to shift gears a little bit, and the entire segment moving forward is going to be about Bitcoin or centered around Bitcoin. So, like, this is one of the most geopolitical important Bitcoin stories we have seen in a while, because this is not just about speculation, not about ETF, and definitely not about meme coins. This is about global trade and one of the most important shipping choke points on Earth. So what just happened is that reports said Iran has launched something called Hormuz Safe. So that's interesting. This is reportedly a Bitcoin-enabled maritime insurance and transit payment platform. The focus is quite simple. So it's to ship through the Strait of Hormuz. Now, why does that matter? Because the Strait of Hormuz is just one of the most important energy routes in the world. So, roughly 20% of global oil and LNG flows move through that route, and this is very serious infrastructure. So, this is a big idea because, like, ships moving through the region might be settled in Bitcoin. That could include transit-related fees, insurance-related payments, maritime logistics. And the key word here is that they are considering Bitcoin, not stablecoins, not banks, but Bitcoin. This is actually due to weeks ago because Tether froze around $344 million in USDT. That happened in coordination with the US authorities, of course, and reports linked some of those wallets to Iranian connected entities. That is the big lesson. So Iranian learn here. Stablecoins can be frozen because there is an issuer, there is a company behind them. Control, of course, exists from the top. Bitcoin, however, is different. So there is no issuer, no CEO, no central would freeze Bitcoin pressing just one button. And that distinction matters here. Bitcoin supporters have said this for many years. So Bitcoin is neutral money, and neutral money matters because when money can be blocked or frozen or political controlled, actors under pressure look for alternatives. And this might be exactly what we're seeing here, even in Iran case. So a sanctions resistant payment rail, that's the Bitcoin thesis in real world action. Now, this is where it gets even more strange. Because like before this official rollout, there were already reports of suspicious actors demanding Bitcoin payments or so-called safe passage in a region. Some were reportedly pretending to be Iranian authorities. Ships were warned, and during geopolitical tensions like this, some vessels were attacked. So this is happening in a very tense environment, not normal shipping conditions at all. If Bitcoin becomes a serious settlement rail in geopolitical sensitive zones, that's a very different level of adoption. This is not retail speculation anymore. This is geopolitical finance. And if we honestly, we have to balance that out. This does not mean Bitcoin suddenly replaces the global financial system overnight, and it does not mean governments will love this. In fact, this could trigger more scrutiny, more enforcement, more regulatory pressure, but strategically speaking, it proves something important. So Bitcoin's utility becomes clearest when traditional rails stop working, and that's when the neutral money argument gets the strongest. And final take, like if these reports are accurate, Iran might be building a real-world Bitcoin payment use case around one of the most important trade routes on Earth. Not because Bitcoin is trendy, but because it cannot be frozen like stablecoins or USDT. And whether you love Bitcoin or hate it, that is exactly the kind of use case its creators imagined. All right, so basically another country that saw it, of course, is the UAE, our beloved country. So this is one of the story that might look not very flashy at first, but honestly, this headline got my attention because smart money is paying attention, because this is not retail speculation. This is not a crypto influencer trade. This is sovereign wealth money. So here with Abu Dhabi just increases Bitcoin exposure yet again. So what happened is that the new US regulatory filings show Abu Dhabi's sovereign wealth fund, being Mubadala, Mubadala increased its position in BlackRock's Bitcoin ETF. The fund now holds more than $565 million worth of Bitcoin exposure. That's through Bitcoin, the whole IBIT, so Bitcoin ETF from BlackRock. And the position actually grew about 16% quarter over quarter. So this was not passive drift. This was active accumulation. And especially when this identity is one of the largest sovereign wealth funds in the world. So state-backed capital managing hundreds of billions of dollars. This is long-term institutional money, so very different type of investor. When sovereign funds makes moves like this, of course, markets are paying attention. So now you might ask, why not just buy Bitcoin directly? Well, the answer is simple. Traditional institutions like regulated products. They like familiar structure. They like clear custody, compliance, and less operational headache. And BlackRock's, of course, is the BlackRock's IBIT, gives Bitcoin exposure to Abu Dhabi without needing to manage wallets or private keys. That makes it easier for big institutions. And what this tells the market is that it also tells us something very interesting. So Q1 for Bitcoin, it was not easy, let's just put it that way. There was volatility. Some hedge funds reportedly reduced their Bitcoin exposure, especially basis trade players, because some of those short-term strategies became very less attractive. But for Abu Dhabi case, they actually added. So that tells you this is a very different mindset. They're not eyeing for the short-term trading, but they are paying attention to the long-term allocation. So the final take, Abu Dhabi quietly increasing Bitcoin exposure might not create some flashy headlines, we know that, but this is exactly how institutional adoption often happens. So it often happens very quietly, very steadily, and without hype. And when sovereign wealth money keeps buying during volatility, that's a signal market should probably pay attention to. All right, so that is some good stuff, some good Bitcoin news, but we will take a short break here. When we come back, we are seeing a different diversion that Harvard University is taking. So on one hand, we have Abu Dhabi buying even more Bitcoin through IBIT ETF. On the other hand, we have Harvard University selling its Bitcoin ETF and at the same time freely exiting Ethereum. So that's interesting. So make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader. still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. So just before we took that break, we mentioned how Abu Dhabi is increasing its Bitcoin exposure through IBIT. Well, if we take a look at the US, and particularly speaking, Harvard University, they are doing very different things. So what they're doing is that they are buying high and selling low. So my question is that if even Harvard University can get crypto timing wrong, what does that tell us? Because one of the smartest institutional investors in the world appears to have taken a massive hit in crypto, and the numbers are getting quite a lot of attention. So what just happened is that here we have Harvard's endowment just filed its latest holdings report, and it shows a very dramatic crypto pullback. They completely exited their Ethereum ETF position and sharply reduced their Bitcoin ETF holdings again. At one point, Harvard's public crypto exposure peaked at roughly $443 million. Right now, it's actually down to around $117 million. Of course, that is a huge drop. So here we have the actual chart of the filing. So here we have the SEC 13F holdings chart. So this tells you the entire story we need to know. So at one point, BlackRock, so iShares ETF right here, it was one of Harvard's biggest public holdings, bigger than some major tech names. Now that position has been cut aggressively. So again, as I mentioned, down to roughly $117 million. And as for Ethereum, right now is completely gone. So does this mean Harvard lose money? Well, based on outside estimates, yes, and potentially they lost quite a lot of money. Some analysts estimate Harvard bought Bitcoin ETF exposure around at the $110,000 range and sold part of that closer to $80,000. Ethereum also looks very painful. So they reportedly enter ETH ETF exposure around $4,000 for ETH, then exited close to $2,600. So the whole estimated total loss is potentially $150 million plus. Of course, that is not a small number. So when you are trying to laugh at Harvard, how one of the best and supposed to be the smartest university or institutions around the world, how they are buying high and selling low. But reality might be more complicated than that, because institutions don't think like crypto traders. They think in portfolio management. They think of risk limits, liquidity, rebalancing, and also operational needs. So if we take a look at the second chart we have here, so this actually gives you more context. Harvard managed one of the biggest university endowments in the world. So here we have like over $50 billion plus. Their job is not to moonshoot some crypto. Their job is preserving capital and funding operations. And that changes everything. Harvard is, of course, under some financial pressure, like federal funding issues, political pressure, higher taxes on endowments, and budget deficits. And when you need liquidity, you sell what's easiest to sell. Bitcoin ETFs and Ethereum ETFs are, of course, very liquid, but when it comes to private equity, not so easy. Hedge fund positions, again, much harder. So crypto becomes the easiest thing to trim. And if we hop onto the third graph, this pie chart actually explains a lot more. So if we take a look at the portfolio of Harvard Endowment, you will see that private equity is encountered 41%, and then hedge fund is 31%. These are not easy assets to dump very quickly. Bitcoin ETFs is just like one click, think about it. And that's why public crypto often becomes the pressure release value. And here's the key point. So Harvard did not fully exit Bitcoin. As I mentioned, if we go back to the form, they still have $117 million worth of IBIT. That matters because if they truly lost conviction, they could have sold everything. But the key is that they did not. So the final take is like, did Harvard mistime crypto? Maybe a little bit, undeniably speaking. But did they panic? Not necessarily. This might be less about like losing faith in Bitcoin and more about classic institutional portfolio management under pressure. But one thing here is clear is that even the so-called smartest institutions don't always nail market timing. And of course, like speaking of Bitcoin, I know viewers out there have a lot of questions like why Bitcoin just crashed below 77,000. Actually, right now it's above, but like we are hanging right there. And based on this chart, we are still, okay, we are using the 50-day MA as support. So being the orange line at the bottom, we are of course using the daily candle. But we are, of course, using the blue line being the 200-day moving average as resistance. So the question people are asking, like, why is this happening? That was a really nice rally. We pumped all the way even close to 83,000. And I would say there's a mixture of reasons. So crypto got regulatory progress, and of course that is confusing. That's some good news. Institutional adoption is growing, of course, good news. Bitcoin ETFs exist. So why is Bitcoin falling instead of pumping? And this sell-off is not about one single headline. It's multiple problems hitting at the same time. So as I mentioned, like Bitcoin pumped, so that was back in 6th of May, literally just 2 weeks ago. We had this really nice rally, but like ever since 6th of May, we are using it as a basically going down and a little bit of divergence. We cover that on the hour side, on the daily hour side as well. So for a moment, Bitcoin bulls thought, okay, we're going to have a massive comeback. The bear market is officially over because this cycle is different. So that's at least the narrative they're throwing around. But honestly, I see the point. Like I see where they're coming from. ETF inflows were very strong. Sentiment improved quite a lot. I mean, talking about 2 weeks ago, regulation looks better. Then suddenly, today, Bitcoin dropped to below $77,000, so $76,000. So what changed? Let's actually break down the reason. So the first one is actually, we cover a little bit in the beginning of the show. We talk about the inflation data. So the latest US inflation data shocked the whole market. So CPI came in at 3.8%. If we take a look at producer inflation, it's even worse. It's sitting at 6%. That matters because markets were hoping for rate cuts. Right now, that hope is basically gone. Some traders are even discussing the possibility of higher rates instead. And when rates stay high, risk asset would often suffer, and especially Bitcoin. So we know what's happening with the Fed. We know Kevin Warsh is coming in, and markets hate uncertainty. Like, yes, Kevin Warsh has said positive things about Bitcoin before, but that doesn't matter in the short run because right now, traders are asking this question. Is Kevin Warsh hawkish? Will rates stay higher forever for maybe for a longer period of time? Will the Fed stay this aggressive? That uncertainty creates fear. And markets don't like fear. When they see fear, they start selling. And this is one of the reasons, if we go back to the Bitcoin chart, why Bitcoin dropped to $76,000, somewhere around that. And this one, the second reason that I want to cover is actually ETF, and this one matters quite a lot. Because Bitcoin's rebound was held by strong ETF inflows. Again, this is really reflected on the chart right here. We had this really nice pump, really nice rally. So on basically late March, we were as low as $65,000. So that was if we take a bottom to its high, that was quite a lot. So 27% in a matter of like a little bit over a month. So that is really strong performance by Bitcoin. But like this flow is, of course, it ties back to the ETF inflow. But right now, we take a look at the this week, especially, of course, right now the sentiment has weakened quite a lot. Some big institution money, they started pulling back. When ETF flows reverse, Bitcoin feels it immediately because ETFs became one of the biggest demand engines. And when it comes to ETFs, usually the majority, the major power, major force is driven by big guys, by whales, by institutions. Because, like as I mentioned, going back to the Abu Dhabi case, like state like this, they don't just like go to Coinbase, create an account, and purchase some Bitcoin, because there is a lot of custodian risk. So that means like holding through ETF exposure is going to be a lot easier for institutions. So that's why when we do analysis like this, we also take a look at the ETF because it reflects what institutions are doing. So that is second reason. And then honestly, the third reason, we have to go to Michael Saylor, and of course, the biggest Bitcoin treasury company in the world, being MicroStrategy. And of course, the company is doing fantastic things for Bitcoin. He has very consistent source of demand, kind of like a market backstop. But recent buying has slowed down quite a lot. So like this orange line represent the Bitcoin holding. Like this one is a special case. So we just had like this purchase on 18th of May. So that was a relatively bigger one. But like in general speaking, it slowed down quite a lot. And of course, they're still buying, but much less aggressive compared to before. And markets, of course, notice this. When your most aggressive buyer slows down, confidence gets shaken. And another reason I could add on to that is, of course, the whole macro pressure. Like nobody can just ignore the macro pressure. The Strait of Hormuz remains a major concern. Oil prices are elevated. Geopolitical tension is high. High oil feeds into inflation, which brings us right back to the Fed problem. So it becomes a very nasty cycle. We have geopolitical tension, we have higher oil, we have higher inflation, and then higher rates. And of course, that eventually equivalent to more pressure on Bitcoin. So the biggest date everyone is eyeing right now is, of course, Kevin Warsh first Fed meeting in June. Markets will watch every single word coming out of his mouth, and also like more inflation data we have to watch, bond yields, ETF flows, and whether institutional demand stabilize. Those are the real drivers right now. So my take is that okay, Bitcoin didn't fall because one disaster happened. It fell because multiple pressure points hit at once. We have hot inflation, we have Fed uncertainty, we have weaker ETF demand, less MicroStrategy buying, Middle East risk, and that's what knocked the market lower. The question now is simple: like, is this just a healthy reset or the start of a bigger macro-driven correction? But historically speaking, Bitcoin is just doing exactly following its 4-year cycle. So I'm not very surprised by that. Like though this pump, if we assume all the way out, like we kind of bottom, like we don't know if it's going to be the cycle bottom, but at least for sure it was a local bottom that was back in 8th of February. So we are trading at 60K, and then we are right now using the 200-day moving average as resistance, but that was still a really generous pump. So 36% pump in a matter of 3 months. Of course, that is very generous. And of course, if you're a trader trading this trend, you're going to love that. As trader, you should always trade with the trend. So trend is your friend. Don't trade against your friend. So that is the general thesis that I believe in. But right now, we are using the blue line as resistance. It does show strong resistance again. So like as I mentioned, we didn't manage to actually close above the blue line for 2 or 3 consecutive daily candles. Like we had one, so that was 10th of May, and then the second one straightly got rejected and closed below that. So that is one weakness that I saw. Another weakness is that we are trading now below the purple region that I drew. So I drew this like months ago, which is around $77.5 thousand, and then to $80,000. Of course, this is again some strong region that I'm watching, and the fact that we are right now we close below this region and using this 200-day, 50-day as support. Again, of course, is another weakness. And if we take a look at the daily RSI, it lost the support on the daily RSI, which is again, like this rising support trend that we happened to lose. That was on 12th of May. That was like 1 week, almost 1 week already. So yeah, looks like this rally is like losing its steam, and we are entering another phase of the bear market. But that's okay because I'm here in the long run, and that's why we're still doing daily shows on Roxom TV. So that's it for Bitcoin, but let's switch over to crypto a little bit. And especially if you guys, are viewers of Roxom TV, have been using or in crypto for quite a few years, I'm sure you'll come across this platform quite a lot. So Dune Analytics. So right now I do want to cover it because like AI is replacing jobs at Dune Analytics right now. So when people think about AI replacing jobs, they usually think customer service or writers, like copywriters, they are really scared of AI, or designers, or maybe software engineers. But right now, even crypto data analysts might feel the pressure because one of the most important on-chain data platforms just made a major move. So Dune Analytics, one of crypto's most well-known blockchain analytics platforms, just announced layoff. So here on X, they announced that. And that was a bigger cut as well. So around 25% of staff, that is a big cut. And the reason why they would do that is actually because of AI. The company says it wants to shift more resources into AI-driven products, institutional data services, automation tools, and enterprise infrastructure. So in simple terms, what they mean is less manual work, and then more AI native products. So if you've been crypto for a few years or a while, I'm sure you have used Dune Analytics a little bit. Like researchers use it, traders use it, VCs use it, media use it. It became one of the go-to tools for tracking on-chain activity. So you can do everything on this platform. So whether it's tracking some wallet flow, DeFi trends, protocol data, if you wanted blockchain insights, Dune Analytics was one of the first places people would check out. So this is not some random small company we are talking about. Of course, this is a very big signal coming out from the CEO of Dune. And historically speaking, Dune works like a data tool. So how it works on the platform is that you needed queries, some manual dashboards, a little bit technical, not going to lie. It was quite confusing for me when I was first using Dune Analytics back in the days. Now, AI changes that. So instead of writing complicated queries, you might simply just type like, okay, show me stablecoin flows into exchanges, or you just type like track whale wallet movements this week, and AI builds the answer instantly. That changes the product completely. And according to management, some very repetitive roles can now be handled by AI. That means fewer humans doing manual analysis work. At the same time, Dune said is hiring more in AI engineering or infrastructure and enterprise services. So this is not exactly a collapse of the business. This is a business transformation. So there are different jobs, different priorities. That's it. And here's another reason behind the shift. So being institutions, because crypto is changing. The customer used to be mostly traders and researchers. Right now, we are talking about banks are entering, hedge funds, market makers, payment companies, ETF players. So TradFi is entering on-chain markets. And those clients, what they want is very serious infrastructure. They want real-time risk monitoring, compliance tools, cross-chain analytics, or faster decision making. And that's much higher value business. So that's why they are shifting their priority in Dune. And Dune is not even alone. Like other crypto data companies are doing the same thing and moving towards that direction. So, for example, we have Nansen, we have Arkham, Glassnode, Token Terminal. Everyone is adding that AI features because guess what? If they don't do it, they're gonna be lagged behind, and people just gonna hop to other platforms with AI added. So maybe it's automated reports or AI summaries, risk alerts, anomaly detection. So because once AI enters the data business, manual workflows get disrupted very fast. So let's be honest here and let's just be balanced. Like, okay, we know AI is fast, but like fast, it doesn't mean always accurate. Like crypto markets are very messy. Like context still matters. Narrative still matter. Human judgment still matters. A clean AI summary can still miss the bigger story or misunderstand unusual market behavior, and that's the risk. So bad analysis and machine speed. All right, so final take for Dune Analytics. Of course, like I have like like Dune Analytics have a special place in my heart because I use it, especially in the beginning of my crypto journey. But like final take here, they are cutting 25% of staff. It's not just a layoff story. It's actually a signal that crypto infrastructure is becoming AI native, and the next generation of blockchain analytics might look less like dashboards and more like AI analysts working beside institutions in real time. All right, so let me know your thoughts in the comment section below if you think this is a layoff that you against or just like a business doing business. Let's have a discussion in the comment section below. But like that's pretty much all I want to cover in today's live show. So before you go, make sure to give us a follow on X. So my X is gemdocrypto_io. Make sure to follow Roxom TV as well because we have regular news coming out on our hourly basis as well. And of course, we have interviews coming from different hosts and also different guests of the show. They are all very prominent guests offering the market takes, the market perspective. So point being, there's so much valuable content you probably do not want to miss out. So make sure to give us a follow on Roxom TV on X. So as always, I'm here live Monday through Friday starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels. So being Gemdome Crypto YouTube channel and also Roxom TV YouTube channel. Thank you guys for watching. I hope you guys have a fantastic Tuesday and see you guys in tomorrow's show.